Hello and welcome to this quick start presentation on how to start your own business. It's presented through a partnership with Workforce Solutions Northeast Texas and Small Business Development Centers. Funding for the Entrepreneurship Training Program was provided by the Texas Workforce Commission and Workforce Solutions Northeast Texas. The purpose of the Small Business Development Centers is to assist entrepreneurs to start and or operate a small business. Today our discussion involves the many aspects of writing a business plan. I'm Julie Parr. The information contained within this presentation is given for informational purposes only and should not be construed as legal advice. Tax laws are subject to frequent changes, and you should consult a tax professional regarding your specific situation. I will begin with some words to the wise. The reason so many enter business every year is because it's so easy and virtually anybody can do it. The reason many fail is because they do not plan before beginning. There are 7 basic steps to starting a business. First, evaluate your personal values and goals. Take a look at the industry. Make your business a legal entity. Write your business plan, which we'll be discussing in detail today. Gather your needed finances. Set up shop. Begin the day-to-day work of what your business does. Finally, operate with trial by error. You will make mistakes. You just have to learn from them to make your business better. Now we're going to go into detail about how to write a business plan. A business plan is a roadmap on an entrepreneurial journey. The plan must be realistic, credible, and compelling. The plan communicates the company's readiness and professionalism. The plan should be written using third-person figure of speech. The business plan key elements include a cover page, the table of contents, an executive summary, your company information, your management and personnel, the marketing plan, which is really a plan within the plan, as well as your financial projections, including investments. The executive summary. This is the first section in the plan, but actually will be the last to be written. It highlights the significant information in your business plan. It is a concise explanation of your business, including your products, the company, as well as your mission, goals, and objectives. It also includes information on your management team, short bios of each of your key managers. You will describe your target market, the market size, market need, and demographic profile. It will include an overview of your marketing plan. How will your company penetrate market and retain customers? It will discuss your competition, both your indirect and direct competitors. You should also describe your competitive advantage, what your company does better or different from competition in the executive summary. Finally, it should include some financial highlights about the business. Here's some company information. You will use the next section of the business plan to basically describe your business. When would you like to start it? Where will it be located? How will you organize your business? You should also include your personal history and accomplishments if applicable. By writing a business plan, you will be able to better explain your business idea in a clear, concise manner. Your mission statement simply answers the question, what business are we in? It defines your reasons for being in a business. What are your personal purposes as well as professional purposes for starting this business? How are these two purposes compatible? How do your purposes benefit your customers? Here are some examples of some famous mission statements from the Campbell Soup Company. To build the world's most extraordinary food company by nourishing people's lives everywhere, every day. From Microsoft. To help people and businesses throughout the world to realize their full potential. Starbucks Corporation. To inspire and nurture the human spirit, one person, one cup, and one neighborhood at a time. Remember, when setting your business objectives, work to make them SMART. SMART. Specific, measurable, achievable, realistic, and time. Now we're going to discuss some keys to success. First and foremost, profitability is the main goal of any business. To accomplish this, some key points to remember are always sell products at a profit. Keep your overhead costs as low as possible. Get your name out there. Always be marketing your company. Create a high level of customer satisfaction. Keep them coming back to you. Always provide good quality, great service, and affordable pricing. How do you reduce your risk when starting a business? Take a hard look at your business idea and do your homework. Are you fulfilling a market need? Who is going to buy your product? What can go wrong? Who and what is your competition? How long is it going to take to get your business off the ground? Know your target market. Define your customer. Like, who are they? What is their age, income, marital status? Where are they? Provide details about the geographic area that you're going to serve. Is it just a neighborhood, city, or maybe a region or even a country? Finally, what do they want? Will your potential customers value what you offer and be ready to buy? To answer these questions, you must do your market research. Validate that a market exists for your product and or service. Collect demographic information, including maps, reports, charts, and discuss how this information supports your business strategy. Determine the size of your market. Is the number of those potential customers large enough to sustain your business? Also, look at the market trends. Highlight trends in your industry that reflect positively on your business strategy. Now it's time to look at your competition. Describe who are your direct competitors. Who will compete with you indirectly? Describe your competitive advantage. Describe your industry and how your company is uniquely qualified to succeed. Next, consider the competition. Describe who are your direct competitors. Who will compete with you indirectly? Discuss your competitive advantage. Describe your industry and how your company is uniquely qualified to succeed. Provide examples such as your superior management and quality, proprietary technology, or maybe a unique niche you have. Maybe it's your outstanding business systems or valued added services that will put you ahead of your competitors. When thinking about this part of your business plan, don't fool yourself. No matter what you do, there is no such thing as there is no competition. Next in your business plan, you will discuss the 4 P's in your marketing mix: product, price, place, and promotion. What is your product? Describe each product line, your product features and benefits. Price. What is your pricing strategy? Is your pricing consistent with your product? How does your pricing compare to the competition? Why will customers pay your price? Place and or distribution. This entails how you will deliver your product to the customer. What is the primary distribution method? What other distribution methods are offered? Does the business address enhance desired perception? Is the facility owned or leased? Any built-outs or improvements needed? Describe property, surrounding area, and why this is a good location for the business. Promotion. This includes all of your marketing avenues, including advertising, public relations, sales, or pricing promotions. The next section of the business plan will discuss your management and personnel. First, management. Describe your key team members. Discuss the owner's or manager's experience. Present this information with an entrepreneurial perspective. Show who will be responsible for each functional area of the business. Also determine if there will need to be an advisory board used to fill in management gaps. Personnel. First, present your startup personnel needs. What type of compensation will be required? In your business plan, you might consider including a staffing worksheet with job descriptions, number of employees in each role, and pay rate. The next part of the business plan is operations. What are the critical processes that need to go right for your business to succeed? Show products or services to be produced or delivered. How will service be provided to the customer after the sale? Now you will have to determine your startup requirements. They include startup costs such as legal, stationery, brochures, consultants, the startup assets needed. It includes the cash balance needed on the starting date and other short and long-term assets. Together, your startup costs and assets equal the total startup requirements. When you are determining the financing needed for your startup, you must look at your investments and liabilities. Your investments can come from you, the owner, as well as other investors. Your liabilities can be both short-term and long-term. When you subtract your total liabilities as well as your loss at startup, you can then determine your total capital and liabilities. Next, you will need to perform a break-even analysis. Determine how much you will need to sell to break even. What are your fixed costs? And what are your variable costs? There are online break-even calculators that can assist you with this part of your business plan. Lastly, you will need to do a financial projection for the business. The objectives of the financial plan are first to establish profit potential of a business given reasonable assumptions. Second, to determine your capital needs. And third, to demonstrate that the business can generate cash to operate and repay loans. How much money will you need to get started? What are your total costs? How much is needed? What will be your equity injection? How much will you as the owner invest? Now we'll look at other sources of funds and how they will be used. Some sources might be investment, bank loan, trade credit, and other uses include improvements, furniture and equipment, working capital. Let's look at the steps in financial projections. First, estimate sales by month. Second, calculate gross profit percentage by product line. Third, determine amount of inventory. Fourth, determine average collection period. Fifth, determine how fast vendors must be paid. Sixth, estimate fixed asset requirements by month. Seventh, list repayment schedule for existing loans. Eighth, estimate any startup, one-time, or unusual expenses. And ninth, estimate fixed expenses by month. Now let's look at the financial statements included in your business plan. Income statement answers, how much profit will the business make? When will the profits be made? The balance sheet answers, how much of a business do owners own? How much debt is owed to creditors? Can funds be borrowed? And the cash flow statement answers, when does a business begin to cash flow? How much cash will the business generate? The income statement. It includes revenues and cost of sales. It includes selling, general, and administrative expenses. Some cash outflows are not included. Example, principal payments on loans. Not all expenses are cash outflows. Example, depreciation. Next, you will have to estimate sales. To do this, you will need to talk with customers or vendors. Check out industry averages or competitors. Estimate by product categories. Estimate your annual sales broken down into monthly expectations. Don't forget about seasonal fluctuations. Estimate average daily sales or traffic. You may also want to include a chart with your labor cost estimates. The last financial statement we will look at is known as the cash flow projection. This is the most important of all the projected financial statements. Business owners must have a fundamental understanding of what cash flow is and how cash flow works. Failure to adequately understand cash flow can be fatal to a business. Cash flow projections include all cash coming into the business. It includes all cash leaving the business. Obviously, a business cannot operate in the absence of cash. It must be included as part of a monthly and annual projections. Here's an example of a cash flow projection. You start with a beginning cash balance. You then add your cash in or income. Then you reduce it with your cash out, such as payroll and purchases. Together, these leave you with your final cash balance. Some final thoughts about the financial plan. It is important that the owner have ownership of the financial projections. Projections should be prepared and presented on a monthly basis for the first 3 years. Understand the impact of any business cycle and how this affects your business in the long term. Many business plans also contain an appendix, which includes 3 years of performance statements, management resumes and professional certifications, personal tax returns, personal financial statements, important legal documents such as copies of leases, business licenses, contracts, and others, and letters of intent. Company-specific profiles such as financial, trends, competitive intelligence, management team. Industry overview, which includes financials, market size, companies, trends, and trade associations. Market research, which includes competitive landscape, market share, statistics, and consumer data. Demographics, which includes populations, spending, lifestyles, income, business data, which is relevant to the target market. And literature, which includes relevant business topics. In summary, today we have briefly reviewed the basic steps for writing a business plan. We have not covered every aspect of the planning nor examined what your individual business may need in addition to the basics, but we did cover the overall sections that should be included: an executive summary, your company information, your management and personnel, the marketing plan, as well as your financial projections. The information contained within this presentation is given for informational purposes only and should not be construed as legal advice. Thanks for joining us for our Quick Start training modules, which include legal issues, marketing strategies, setting up business records, financing your business, and writing a business plan. The North Texas Small Business Development Center Network offers you compelling solutions, financial projections, valuation components, business assessments, business plan overviews, operational policies, international trade, federal and state regulation compliance, acquisition, strategic planning, loan packaging, procurement, sources of capital, succession planning, investor presentations, certifications, cash flow analysis, and marketing plans and research. Counseling sessions are free of charge and scheduled by appointments. Please contact us for additional assistance with your specific business. For businesses in Delta, Hopkins, Lamar, and Red River counties, please contact Paris Small Business Development Centers for assistance at 903-782-0224. For businesses in Bowie, Cass, Franklin, Morris, and Titus counties, please contact the Northeast Small Business Development Centers for assistance at 903-434-8237. Workforce Solutions Northeast Texas is an equal opportunity employer/program. Auxiliary aids and services are available upon request to individuals with disabilities. Relay Texas TDD, his number is 1-800-735-2989. Voice is 1-800-735-2988. It serves Bowie, Cass, Delta, Franklin, Hopkins, Lamar, Morris, Red River, and Titus counties.